Hey gang, Mandla here at FX Link. Thank you for joining us on this week's trade review videos. In this week's video, we are going to talk about the importance of adapting to the markets and how not to fall prey to the bandwagon effect. There's this interesting chapter in the book called The Art of Thinking Clearly. It says, if 50 people say something foolish, it is still foolish. Right? Imagine you are on your way to a concert. At an intersection, you encounter a group of people all staring at the sky. Without even thinking about it, you look at the sky too. Why? Social proof. In the middle of the concert, when the soloist is displaying absolute mastery, someone begins to clap and suddenly the whole room joins in. And you do too. Why? That's social proof. Now, social proof dictates that individuals feel they are behaving correctly when they act the same as other people. In other words, the more people who follow a certain idea, the better we deem the idea to be. And the more the people who display a certain behavior, the more appropriate this behavior is judged to be by others. Okay? Now, why do we act like this? Well, in the past, following others was a good survival strategy. Suppose that 50,000 years ago, you were traveling around with your hunter-gatherer friends, and suddenly they all ran away. What would you have done? Would you stay put and look at your surroundings to see whether there is a threat around? Or would you have run away as soon as your friends have run away? And we all know the answer to that question. Well, 90% of us here who are listening to this review today would have run away too, without even thinking about it. Why? Right? Social proof. So, same goes to trading. Okay? The same goes to trading. We do things because everyone else seems to be doing it, even when there are no good reasons for doing so. Imagine you wake up in the morning. Before doing your technical analysis, you head over to the kitchen, make your breakfast, go back to the dining room, eat. While eating, you look at the news. Suddenly you see breaking news, right? You see that Euro USD has gone down because of external factors that occurred on Europe, and it caused the pair to plunge down, right? So everybody is screaming bearish, bearish, bearish on the Euro USD pair. Okay, when you click on your on forums, everybody is spouting negativity against the euro. You click, you see, maybe if you follow trading gurus, you see them spouting that similar pattern too, the similar thing too, saying that Euro USD is going down. So what do? After eating your breakfast, you head over to your charts, you look at your charts with your technical analysis tools and found nothing bearish. Nothing indicating a bearish sign on your charts. So your technical analysis, your trading plan doesn't give you a right to be going bearish on the market. So you look at more charts and found some bullish clues, but because everyone else was saying that the bull market for Euro USD would end soon, you sold all your long positions. So the outcome of that of the market does not matter. As soon as you have sold all your long positions, by that time everyone else is saying Euro USD is falling, is falling, is falling, sell, 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 sell. And whether it continue to rise or fall, you have already fallen to the social proof bias because you followed the head instead of your analysis, right? How can we avoid that? If you could do some research, you'd find that many of the best traders are often lonely. Trading is a lonely business. Why is that? Because they listen to their own analysis and ignore the voices of the masses, the voices of the crowd, the news, the gurus, and all chat and many chat forums. And you might think that to avoid the bandwagon or the crowd, you must adopt a contrarian mindset and always go against the crowd. And sometimes that's not the case. The crowd might be right in other cases, or they might be wrong. But you are probably wrong when you think that something is right only because everyone seems to say so. Looking at the Euro Aussie dollar pair, we had a long position, long trading opportunity right here, with a kettle zone which is pretty big, starting from 60.37s back down to 58.49s, which is probably a 190 something pips worth of a move back down. So we had to wait for a move right here where we had our Fibonacci confluence. And the last thing we had to look for was a excuse me, let me delete this one. The last thing we had to look for was our setup, which is a double bottom in this case, then a higher close, so we can enter long in this case, in this trade. So we had a potential ABCD move starting from here. Okay, excuse me guys, I'll delete this. Starting from here, and it ended about right here, probably at the end of this box right here that I've highlighted right here, which is at 58.50s. Okay, so when the market opened, it broke above this highs, right, signaling a bullish move ahead. Okay, then we had a equal legged move starting from here, but we had to adjust it because our retracement was further deeper, became deeper. And as you get more experience in the market, you would notice that the market doesn't give you the exact perfect trading opportunity you would like to have most often. So it'll give you the same pattern, but it will never give you the exact same pattern that you would be looking for in order for you to go long. So you have to adjust into the market and adapt into the market, have various techniques so you can adapt into the market. Okay, so we had to move our leg right here, and it came back to our high right here. Let me zoom in so you guys could see clearly. Okay, as soon as the market made that retracement, we went down and we had our lower close. So our buying of opportunity was invalidated right here. But if you have watched my analysis on Euro Aussie on our Sunday's market preparation videos, you would have noticed that my interest point was right here, because I had a lot of Fibonacci confluence right there, which was our Fibonacci extension coming right here. We have our 1414 terminating at 5900, which is another psychological number right here, which is a very significant price level right here. Okay, and we have our 1618 extension terminating at 5858, which is close to another psychological level, which is 5850s. All right, so as soon as the market gave us our lower low, lower close, and we had a termination right about here of a ABCD pattern, equal leg pattern. This is what happened throughout the market. Price came exactly to our point, hit our 1414 extension, came exactly to our ABCD equal legged move to our Fibonacci confluence, back to the structure level right here, and became oversold. So in this case, one of my trading requirements was met, which is in an oversold state, which we got right here in the market. As you would see on my RSI, what do we have? Oversold, right? So one of my trading requirements was met and oversold, but I don't only look for an oversold. I want to see a double bottom, and then I want to see a higher close with a bullish divergence. Price gave us a bottom. After giving us a bottom, we are heading back where? To our lows right here. So we have a lower low right here. As our lower low hits our lowest close, which is right somewhere right here, and we have a higher high. So you could have entered as soon as the market gave you this. As you would remember, I had my first targets right here, which were 146 pips worth of a move, and a risk of 74 pips worth of risk on this one, which would give us a 1:2 risk to reward. And if you have entered, this is what occurred throughout the week. Okay, as you see, our setup was met, double bottom, bullish divergence from this low right here to this low. We have equal lows but higher lows on our RSI indicator, and this is what happened right now. We are sitting right here in the market. I personally have broken even in this trade, so if price does come back and hit these entry levels, I will be stopped out on break even. Second targets are right here, which would mean that I will be shooting for a potential 266 pip worth of reward in total on this particular trade. Now a similar thing occurred in the market on yen, right? If you have seen the video, and I encourage you guys to see our Sunday's market preparation video. This video not only shows you our trading analysis for the week ahead, but it also shows you the type of trading style that we have adopted in the market, that we continually apply in the market, so we can find high probability trades in the market. So in this case, my partner was looking for a retracement back. Let me take this one. A retracement back into this level of structure and a similar type of pattern, which is a double bottom, a higher close, then entering next bar market. And this is what occurred in the market. Okay, price indeed let me take this off. Price indeed went to our levels of structure, hit that 1414 extension, and then became oversold. One of our trading requirements was met. Now we look for a retest at those structure levels and a higher close, so we can enter long in this case. And this is what happened. Price retraced back. Okay, so if I could zoom clearly, for a double bottom to occur, our lowest low must at least touch our lowest close. to be validated. Okay, right? Even though right here we have, excuse me, let me enlarge this RSI, my RSI tool. Okay, even though right here we have a bullish divergence, okay, what has happened right here? What occurred right here? We haven't had and we have an invalidated double bottom. Our lowest low right here, okay, didn't hit our lowest close. If I could zoom in, and like I said, the market won't give you a exact type of pattern for you to enter into the market, but the market will give you a similar type of pattern for you to enter. It depends on you, on whether you will adapt as a trader, or you would stay stagnant and look for those certain type of trades that which will occur not many times in the market. Okay, so if you have entered long on this one with a high close, okay, your risk to reward would have been lower than this low, and your targets would go, first targets would go right here, second targets at the retest of those highs, which was right there. So this is what happened throughout the week. Okay, price, soon as it retraced back right here, we had an extension towards those highs right here, and our profit were hit, okay, by Thursday night over there. Right there, we would have gotten above a 110 pips on this particular trade, and you would have gotten on first targets, you have gotten more than 50 pips, and then second targets more than 110 pips on this particular trade.